How to fill out the 2020 W4 form using the IRS tax withholding estimator, also known as the calculator, for a person who is married, filing jointly, and they have one child. Hello, you got Mr.
and Mrs.
Smith, and in this brief video, what we want to do is show you how easy it is to use this tax withholding estimator that the IRS has allowed us to get access to, and it's definitely simplified. But basically, for a person who's married jointly and they have one child, and it all starts with the About You section.
Yes, and I think that you're really going to like this form, you guys, so let's dive straight in. First question asked, what filing status will you use? We're doing married, filing jointly. Can someone else claim you as a dependent? No. Dependents. Do you plan to claim dependents on your tax return? Yes. How many dependents do you anticipate claiming? 1. All right. Income. Do you or will you or your spouse hold a job this year with paychecks from which federal income tax is regularly withheld? Yes. How many jobs do you expect to hold this year? Include jobs you no longer hold that was from this year. Let's do 1. How many jobs does your spouse expect to hold this year? 1. Pension. Will you or your spouse receive income from a pension this year? No. Then it asks other. They want you to check all that apply to you and your spouse. This is for other sources of income, you guys. Things like Social Security benefits, scholarship, grants, unemployment. Do you have any other income coming in? Then it asks your demographics. Will you be 65 or older January 1st? What about your spouse? Are either of you blind? We are going to leave all of those boxes blank in this example and go next.
Income and withholding. This is where it gets interesting. So, enter your income and withholding for each job and or pension you will earn income from this year. Each job should be entered separately. The order in which you enter them does not matter. The estimator does not support decimals. Round all numbers to the nearest dollar value. So, that said, let's go. Your job. Do you expect to hold this job the entire year, January 1st through December the 31st? The answer is yes. Nobody's expecting to get fired anytime soon. How frequently are you paid? We're going to say this person is paid every 2 weeks, which is, a common number, but fill in what applies to you. On what date did your most recent pay period end? We're going to assume that pay period ends on Friday. So let's say that the original pay period ended on January the 3rd and also ended on the 17th. So, as you see, once you click that, the calendar pops up. So the 3rd was a Friday, and then 2 weeks from that was the 17th. Today is currently the 29th, so we're just going to roll with the 17th being the last time that their pay period ended. Enter the total wages you expect to receive this year. Just an expectation of what you expect to receive. $45,000 is the expected amount that they plan to receive, so we're just going to put that there. Any bonuses. Enter any bonuses. Now, we're going to leave this at blank or 0, no bonuses, but if you have some, then you'll put it there. And keep in mind, anytime you see this question mark at the end of a question, basically is them answering your question, if that isn't redundant enough. So basically, all you have to do is, if it's something you're unsure about, hit that question mark. It'll elaborate, it'll let you know. But we're going to skip all of those, no bonuses, and basically the reason why they want to know if you're receiving any bonuses is because they want to tax it accordingly. Any form of income, they want it pretty much put on here so they can tax it accordingly, and it benefits them, but it benefits you as well if you understand it. Let's go into the next part. Using your last pay statement, enter the total federal income taxes withheld. This one is the year to date, and this is why it's important for you to have the check stub right in front of you, because when you have the check stub in front of you, you don't have to guess. It's right there. So what we put here is just an example. Your check stub will say what your year-to-date amount was held from you federally and what your last check stub said. So in this example, we're going to put that the year-to-date was $864. They've been paid twice this month. So on here, we're going to put for the last check is $432. So you put in whatever your check stub states. In this example, the reason why it's $864 through year-to-date is because this is their second paycheck, and each paycheck they're being taxed about $432. So $432 times 2 for their second paycheck is $864, just in case you're wondering. But put it in based on your check stub. Did you or will you contribute to a tax-deferred retirement plan such as a 401k? We're going to say no here, but if that fits you, say yes. If you're unsure, hit the question mark. It'll elaborate in great detail. Did you or will you contribute to an HSA, FSA, pre-tax child care credit account, or other, also known as a cafeteria plan? Hit the question mark so you can see what the cafeteria plan is, just in case you didn't know you was contributing and you actually are. This person, we're going to put no. Now it's time to get into the spouse's information.
All right, and I'll take that. Does your spouse expect to hold a job all year? Yes. How frequently is your spouse paid? You guys, we're going to do every 2 weeks. Now keep in mind, every 2 weeks and twice monthly are two different things, okay? So just know which one it is, okay, because they are different. On what date did your spouse's most recent pay period end? We're also going to go with the 17th on this one. Keep in mind, this calendar is already up to date based on the day and the date that it is when you're filling this out, okay? This is how we came up with our estimates for this example. Then it says, enter the total wages your spouse expects to receive this year. For the second spouse, we're going to do $35,000. What about bonuses? We're going to say that the spouse has not received any bonuses and are not expected to receive any bonuses on this job. Then it asks, using your last pay statement, enter the total federal income taxes withheld. We're going with year-to-date 596, and the last check was 298. Okay? Did your spouse contribute to a tax-deferred retirement plan such as a 401k? We're going to do no. Did your spouse contribute to HSA, FSA, pre-tax child care credit account, or other cafeteria plan? We're going to do no. And then, let's go to the next step.
Adjustments to income. Most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? Now, just because it says most don't have a large enough adjustment doesn't mean that you don't have a large enough adjustment. So on here, we're just going to hit the question mark and we're going to see the adjustments and you'll fill it out accordingly. But we're going to let you know now, we're not going to select any. We're going to keep this video short and sweet and go to the next step, but we at least want you to see an elaboration of this segment. Adjustments to income. So what is it? You may qualify for certain adjustments which reduce the amount of your taxable income. If you're not sure that you are eligible for any adjustments, select See Adjustments and browse the help tips for the adjustments listed. So let's go ahead and click the See Adjustments, and here's the drop down. Student loan interest deduction. If you're unsure about that, hit the question mark. Educator expense deduction. Deduction for contributions to an IRA outside of deductions included in payroll deductions. Health saving account deduction. Moving expenses. Alimony. Penalties. Certain business credits for reservists, performing artists, and fee-based government officials. So these are some of the adjustments that are listed, and something that you may be contributing to may fall into this category, but hit the question mark to confirm and see if you fit it. But for now, we're just going to go to the next step.
All right, deductions from income. It says you qualify for a standard deduction of $24,800. Deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deductions? We're going to take the standard, you guys, but I'm going to click that question mark here so that you can see what the standard is. It says the standard deduction is a specific dollar amount that reduces the amount of income subject to tax. Your standard deduction amount depends on your filing status, dependency status, age, whether or not you are blind. Alternatively, you may itemize your deductions, which would be your advantage if your total itemized deductions exceed your standard deductions. If you are unsure, If you should take the standard deduction or itemize, you can view the deductions and input them. The calculator will then determine which is higher for you. So I'm going to exit out of that, and then I'm just going to click on itemized deductions just to see if we qualify for anything. So here's an example of itemized deductions: medical and dental expenses, taxes you paid, qualified interest that you paid, gifts to charity, casualty loss, other itemized deductions, and of course there's question marks next to each. Scroll back up, and we are going to take the standard deduction because in this case we don't qualify for any of those.
Tax credits. Based on your inputs, you qualify for tax credits for your dependents. So they're letting you know, hey, you qualify for the standard deduction. Hey, you qualify for tax credits. So based on your inputs, you qualify for tax credits for your dependents. Tax credits are amounts you subtract directly from your tax obligation. Do you want to learn more or finish and get your results without tax credits? So if you say finish and don't get results, that's basically saying that you don't want the tax credits you qualify for having dependents. So we're going to hit see tax credits. We want to know what we qualify for. Here it says child and dependent related. You stated you have one dependent. If this is incorrect, please return to step 1. It's correct, so we're going to keep going. Child tax credit. The calculator will automatically determine the number over 16. Enter the number of qualifying children under 17. They're talking about the age. So we have one child under the age of 17 in this example. Child and dependent care tax credit. Select the number of qualifying persons. Now, just so you'll know what this is, child and dependent care tax credit. You may be able to claim the child and dependent care credit if you paid expenses for the care of a qualifying individual to enable you and or your spouse, if filing joint, to work or actively look for work. So this is for a person who's paid for some type of daycare, something that allows them to go to work or look for work. They're really specific on that. Well, we're going to leave this blank. This person doesn't have a child that's going to daycare. Enter an estimate of your work-related child and dependent care expenses. So if this person answered yes to this, then they will put in an estimated dollar amount here. We're going to proceed. Earned income tax credit. Select the number of qualifying children. We're going to say 1 because if this person qualifies for the earned income credit, it's based on their income being low enough in comparison to their situation, them having one child, them being married. So we're going to put 1 right here. And of course the question mark can help you if you need any help. So I'll go ahead and put this here because a lot of people are looking forward to this earned income tax credit when it's time to file each year, or earned income credit. So it says the earned income tax credit or earned income credit is a benefit for working people with low to moderate income. To qualify, you must meet certain requirements and file a tax return, even if you do not owe any tax or are not required to file. Earned income tax credit reduces the amount of tax you owe and may give you a refund. So it may give you a refund, and it's not an overpayment refund. It's just that you qualify based on your scenario. Adoption tax credit. Enter the amount of adoption tax credit for which you expect to be eligible. So we're not going to put anything here. This person hasn't did anything adoption related. We're going to leave it blank, but the option is there. Then it also has other things that are tax credit related. Foreign tax credit, educational, retirement savings, homeowner, elderly or disabled, business, alternative minimum tax, energy efficient vehicle. So there are a ton of things that you get tax credits for if you fit that scenario. If you're unsure, I always hit the plus sign to elaborate or the question mark at the end to determine whether or not it's something that fits you to lower your tax liability. If not, proceed, hit next, and then we have your results. Now, this is the page that most people have been waiting on. These are the results. And it makes it simple because many people shy away from filling out the form because they're scared of what may happen when it's time to file taxes. They think they're going to owe. They think they're going to get a large refund. They think that, you know, whatever they're thinking, this kind of minimizes that. The more accurate information that you put in, the more accurate results you will receive. So I want you to take that and really understand the importance of having your check stub in front of you and filling it out the best way you know how, so you can make these numbers the most accurate possible. And you can scroll down, see all of your results based on what you put in. But we want to go to the top because there's some perks and some things that the IRS incorporated into this estimator that we really feel are important. So in this example, we're going to show you what it says. If you do not change your withholdings, you are likely to get a refund based on what you put in. The expected tax withholding. So this is what you're expected to pay based on your numbers throughout the year. $18,980. So just $20 shy of $19,000. Your anticipated tax obligation based on your scenario is only $4,232. So the difference between those two is the estimated overpayment, also known as the refund. So you will end up overpaying in taxes throughout the year, $14,748. So this is what your refund will be. But this is what we love about this W4 tax withholding estimator. It asks you, are you happy with your results? Then you don't need to do anything. Leave it as is. If you're happy with getting the $14,000 refund towards the end of the year based on your how you filled it out, great. Do you want to adjust your results? And it says use the slider below to select the approximate refund amount you'd like to get. So they're giving you options, and I know the Queen has some good things she wants to say about this.
Yes, most definitely. You guys, listen, we used to give our opinion on this, okay? The most popular opinion that we used to give on getting back a large refund at the end of the year was this. That's crazy, right? Especially if you're the type of person, you're incurring late fees, your disconnection notices, reconnection notices, you know, things, all types of overdraft fees. If you're basically struggling, living paycheck to paycheck throughout the year, and you're overpaying in taxes, that's insanity, okay? That was our opinion. But we also understand now the flip side. If people feel as if, you know what, I'm not disciplined, if I get a large refund, you know, throughout the year, I'm not going to be disciplined with that money. I'm probably just going to, you know, blow it off even more. Then we understand you wanting that lump sum at the start of the following year, okay? We're not giving our opinions on what we feel is best in 2020, but what we are going to give you are options, okay? At the end of the day, it's all about options. But what I love about this adjuster tool is you can do both. You can get a lot of this refund throughout the year. You can get the money dispersed, and you can still get a refund at the end of the year, okay? So we're just going to slide this tool. Let's say you go straight to the middle, so about 7,000 and some change. Okay, right there. Let's say, you know what, I want $7,500 throughout the year, and I want a refund of about $7,500, a little bit more at the end of the year, right? Guess what? You can do that. This is called giving yourself an instant pay raise every single time you get paid. Now, this would be a very smart way of doing things. I said I wasn't going to give our opinion, but I'll say, in my opinion, okay? But look at what it does for you. It says, to get your desired refund amount, you need $276 withheld from each paycheck. That's $156 less than your current tax withholding. So if you wanted to get a portion of it throughout the year and still get a refund at the end of the year, it tells you what to put on your W4 form, and they took it a step further. They have a little blue box that says download pre-filled form W4, where they've already put in the numbers for you. This is one time where you can say the IRS is the GOAT, right? The greatest of all times for this, because they're opening up more options for us, guys. Let's go to the slider tool, and let's go all the way to 0. Let's say, you know what, I don't want to refund at all. I want to get that whole $14,000 throughout the year. Well, you see the numbers change, and it says to get your desired refund amount, you will need $59 withheld from each paycheck, $373 less than your current tax withholding. Now, that's a pretty big pay raise that you're giving yourself. All we can tell you guys, regardless of what you choose, is we want you to make smart financial decisions with the money. A lot of y'all know that we teach financial education. We help people to go to the next level financially. Listen, getting $14,000 throughout the year, you can really come up okay? You can literally start paying down debts. You can have an emergency fund fully established. You can start investing. You can travel with your family if that's one of the things that you've been unable to do because of money. There's so many different avenues that you can take. We just want you to be smart with the money. If you need a strategy, if you need a game plan, we're here to help you do that. All we want you to do is make smart financial decisions, because you really can achieve freedom, some level of freedom, with now having this option available.
I love it. So, if you got any value from the video, make sure you like it, thumbs it, heart it, share it with somebody who else you may feel will benefit from this information. Subscribe, hit the bell, whatever you got to do to stay in the loop of the information that we put out, because we also show people how the W4 can actually take you to building wealth using strategies in order to make overall great decisions and have overall personal financial success. So that's all we have in this video. Let us know if it's a video in particular you would like us to go into, because we have more coming centered around this 2020 W4 and using the tax withholding estimator. However, this one was all about being married, filing jointly, one kid. So fill it out according to your situation, and I promise you, you will love it. That's all I got. That's all you got?
That's all I got. Mr. and Mrs. Smith signing out.